Let me flash it out without my face and in the full zoom in mode. Today, you're going to hear in very simple terms how wealth is exactly made. In fact, so simple until we'll use a whiteboard for this whole discussion. Now, this is pretty important because for a few things. The first is it touches a bit on financial literacy, how to understand money, how to understand income, how to understand costs, etc., etc. The second is if you want to be an investor, you do need to understand some of these terms, especially when you dive into income statement and balance sheet of a company. So without further ado, everything starts with revenue, correct? Revenue. Now, revenue is actually like income. If you operate a business, revenue is the top line. That's what they always call. Now, let's put a number to things. Revenue, $1 million for this illustration. Revenue can come from a few sources. If you sell a product, for example, like Apple, they sell iPhone, they sell iMac. The revenue comes from the sale of a product. If you do a service, for example, you do a tuition business service, revenue is what fees that you collect. So later I have a real case study to show you how these numbers actually apply to a particular company that I've invested in before. So after revenue, there's cost, correct? Cost of goods sold. Now follow me on this, because when you provide a product, when you provide a service, there's definitely costs on your end, correct? And if this cost is say 900,000, that will leave you with 100,000 gross profit. Now, this 100,000 gross profit is important for you to analyze because when you dive into the books, you want to look for companies that have a good margin. So 100,000 gross profit, this part, keep in mind, later I'll explain how the things actually extrapolate when it comes to real wealth. Take, for example, you do a service business, which is today's case study that I'm reflecting against. In this service business, the cost of goods is no longer that. It's more of commissions. It's more of fees paid in rendering this service, correct? So if you provide a service or a consulting or even the intuition business, that is the fee that you paid for human labor. So that is the fee that is paid out. And then what you derive net-wise is 100,000. So if you follow to here and you understand, hey, this is a potential business. You have someone or a team that provides services, collects $1 million, they get paid 900,000, 90%, pretty good. Net, you get as business owner $100,000. But in the process of building this business, you do have some costs, correct? Some administrative costs, other costs. This is needed because you want to provide value. Because in a service business, there's accounting, there is compliance, there is a lot of administrative costs that you need to take on so that your salespeople or your team can provide that service and derive for the business income. So this cost does come in. You rent the place also comes into this cost. So understanding that, your net profit now becomes 50,000 net profit. Now this impacts to a company's earnings per share, because we look in terms of net profit. And as of this juncture, I do believe that profitable companies are going to survive this downturn a lot better than non-profitable, expanding tech companies. So look in terms of net profit, you understand, okay, with a net profit, your business is viable. With net profit, your business can actually put real numbers to things. And as a business owner, you have $1 million revenue, 50,000 in net profit. You can see it as a passive income kind of thing, but it's still not really passive because you're running the business, correct? But 50,000 net profit doesn't seem a lot. Do you get rich with $50,000? Probably no also, right? And that's where it comes to the next leg of things. This is just pretty much income statement, and you understand this is financial literacy 101. But when it comes to wealth building, this is the next part that would probably blow your mind if you don't really see it before. With a net profit of 50,000, the business is running. If you were to sell the business, do you understand how things work? Or how it's priced on the market? There's something called a price-earnings ratio, which means you can sell a few years of future revenue because business is running, right? Business is smooth. You have people that bring in sales, you have people that do administrative, and then every year it generates you 50,000 profit, assuming there's no growth to things. In this situation, maybe you can sell the company at 5 times price-earnings ratio, correct? If you watch shows like Shark Tank, they will evaluate a company based on profitability or sales. 5 times price earnings means the company could be worth $250,000. Not too bad. Now you have a business that is worth $250,000. If you sell to someone, maybe you can fetch that price. But as you know, what the buyer is willing to pay also depends on situation. That's where I actually teach on price earnings multiple. Assuming the market is favorable for that sector, or that sector is growing very quickly, it's very favored by government, by the circumstance, and the price of that company is now 10x, 10 times price earnings. You realize that your price earnings expansion itself will cause the company to be valued at $500,000. 1 million revenue, 500,000. If you own this business now, it's worth 500,000. Wow. Now we are seeing some wealth already. Everything, of course, I'm explaining in terms of simplistic terms. You have one person or one team bringing you $1 million. You now have a $500,000 worth business that you can sell if someone's willing to pay you a 10 times price earnings multiple. Now, you're not going to stop there, correct? You found a magic formula. If you have one person, why not have 5? Or why not have 100 of these people? 100 of these people that bring you $1 million in revenue would mean that now you have $100 million in terms of revenue. You have 100 of such people times 100. Then your company now becomes a lot more valuable. It's now worth $50 million. Hey, if someone's willing to pay a 10 times price earnings multiple. There, you see, now it's a 50 million business. If you get 1,000 of these, 1,000, you realize now that the company's revenue is $1 billion. And then the company's value is $500 million. Follow me to here? Now we almost have a $1 billion company already. You may be thinking this is ridiculous. How does this actually apply to a real life situation? It does. Because in this case, I'm talking about propnex. This is a local, or rather the biggest local property agency. They have agents that bring in $1 million themselves per year. And each agent actually is worth $500,000 in terms of value to the company. Because if we apply a 10x price earnings multiple, as you can see in the chart over here right now, you realize that it's possible to evaluate a company based on a market cycle. And they actually have more than 10,000 agents. Of course, not everybody brings in $1 million. That's probably the 0.01% top performers. That's fine. But the concept still applies. If you can bring in revenue of $1 billion, then the company could be worth $500 million. And as of this time of filming, the company is actually worth more than $500 million. You see the wealth, how the wealth game actually works? Income leads to net worth. A person running, the CEO running this business now has a net worth of $500 million. Not just that, this CEO in his process of running this business actually does earn a CEO's pay, correct? Imagine this, you are running the company. You obviously have a full-time commitment to it and you should be paid before the shareholders. That's fine, that is reasonable. In fact, that applies to all CEOs actually. You look at the books, the top management are being paid $1 to $2 million. You derive income from the business and then you work on the business. That is why CEO of propnex actually embraces his top performers. He understands his business. He is running it well in my opinion. And that's why I've always been tracking propnex. He's running the business. He earns a good income. Not just that, he's building his net worth. And as you can see in the top shareholders list over here, he owns a substantial portion of things. It's very interesting when I look at this shareholders top 20 summary. Not too difficult to break into the top 20. Maybe one day I might own enough of propnex to put my name inside. But as of now, I've actually sold away my stake in propnex. I loved it. I read it out with a 3-bagger all the way to about $1.80 thereabouts. And that's what I actually teach on my course. This course is where I really show you how to understand how stock prices actually go up and how you get multi-baggers with the right situation. If the market situation now when you are viewing this is bearish, do note this may not apply immediately. You do need to have a certain time. We can't control market direction. Unlike causes there are in advertisements, I'm telling you, in bear markets, you are learning, you are building stake that will one day grow in multiple. In a rising bull market, it's possible to get a few baggers in a couple of years, and that's what I exactly teach. So check out the links below if you'd like to enroll in that course. All proceeds will be donated via the JOSH TAN Bursary. Now speaking today, hopefully I've given you a clear picture. How is wealth actually made? You have income, you derive a price earnings multiple, your business has a value. If you know how to price it at the right market situation, know how to exit and enter, realize that making wealth is not that difficult after all. If this whole simple discussion has helped you, smash the like button and press on subscribe, especially if you like content that touches on wealth, as well as retirement planning, as well as investments. And with that, I'll sign off. Thank you for watching. Goodbye.